I am going to go right into my presentation. I'll be brief. So we are looking at the evolution of money. Where did we begin from? What were the various cycles as humans, societies? You know, it may be localized, it may be global. But where have we come from to get to where we are today? That is what we'll be doing. That's my assignment this morning. So the evolution of money. Yes. So many years ago, money, what we know today as money, began in the form of barter trade. So I have salt. Our beautiful mother here has fish. We both happen to live by the coastline. So her ancestors are into, I said I have fish, right? I have fish. So my ancestors are fisher folks. Hers are into salt. So we have a lot of fish in the house, but we don't have salt. They have a lot of what? Salt in the house, but no fish. So I bring mine, she brings hers. We trade, we barter trade. That's how it all began. But this was the problem. It only worked if both parties needed what the other had. So I had fish, she has salt. If she didn't need fish, then it means that there was no deal. Right? Right? So that was the problem. Then from there, we moved to a situation where we're using seashells, we're using cowries, we're using big stones to represent money in quotes. And then from there, we came to the use of coins. I bet that right now, as we sit here, some of you have coins in your pockets or in your wallets. The first form of money, actual money, was in the form of coin. It was either gold or silver. Those of you who are Christians here, in Acts chapter 3, we are told that one day John and Peter happened to be at a certain beautiful gate. How many of you know the story? How many of you know the story? Great. And we are told that this beggar stopped them and he asked them for money. What did they say? They said, silver and what? Can you say it a bit louder? Wonderful. They said, silver and gold have I none. We don't have what you are looking for. So that goes to confirm that as far back as 2,000 years ago. And by the way, those of you who don't know, one of the books we consult for historical purposes is the Bible. So whether you are a Christian, you are a Buddhist, whatever, once you are interested in history, one of the sources up to date is the Bible. So as far back as that time, gold and silver were in circulation and they were in use. They were portable, they were widely acceptable, and they were also valuable. So today, gold is valuable. So today, silver is valuable. On my way here, I checked. I wanted to know, between gold and silver, even in the ancient times, which one was more important? And I found out that gold was considered the most important form of wealth as far back as that time. So that's it. Let's go to the next one, please. Now, this is the problem. Those of you who do savings, I have friends, when they have a lot of coins or they have coins, they are back from work, they have coins, they have a small money box, they dump the coins in. Now, is there anybody here like that who does that? Good. At some point, you realize that that box becomes too heavy, right? That was the problem. These coins became impracticable to carry around, to use. So, something had to be invented. Something had to come in the place of coins. Boom, we have paper money. So, paper money came to replace the coins that we all were using, or our forefathers were using. Now, paper money meant that there had to be banks, institutions that would manage the money, that would give out loans, that would control how we access money and how we save and how we use money. And so banks were born. Now the word bank comes from originally a German word, and then it was adopted into the Italian literature. Okay, now it's basically in Italy it means table or bench. In Germany it meant bench or counter. So basically the same thing. So you notice that even in our banks today they still use counter, right? They still use the word counter, right? Or they still use the word counter, yes. So banks were born as commerce grew, as businesses grew, as people needed, to move around money to do a thing or two, as nations needed money to do a thing or two. So the word bank comes from the Italian banca, which means bench. Now watch something carefully. When banks came up, they threw up another problem. You know the situation where you solve a problem, but after solving the problem, it throws up another set of problem of its own, right? When the banks came up, the biggest problem we have with them, many countries have with them, is the word control. Control. Can you say that word with me? Control. Who likes to be controlled here? Good. Nobody wants to be controlled by a bullying boyfriend or a jealous husband. The problem we had with them was control. But the banks came, banks grew to safeguard money, to issue loans, and to control our access to funds. So there are times you send money from one bank to another, and the bank tells you that you can only access the money 3 days from today. Who has had that experience? It's my money. I only moved it from one of my bank accounts to another bank account. But you are telling me that I can have access to my money in 3 days. What? So the control thing is still there. And that is why this session is important, why this conference is important. Because this conference and the things we are coming to discuss here would address that control aspect. It would address that. Please, let's go to the next slide. The digital revolution and cashless societies. So then, computers plus internet, you have digital money. Now, digital money, it is of course, it's not all the time that you need internet. Some of you know about cold storage and warm storage or hot storage. It is not all of them. For example, if you want to send money from your Momo account to somebody, do you need internet? No. Do you? Good. But if you are using, for example, the MTN wallets to do that, do you need internet? Yes. So there are situations, there are trade-offs where sometimes you need internet, sometimes you don't. So computer plus internet gives us digital money. Online banking, mobile wallets, tap to pay. Tap to pay cards. Now, Sweden is particularly interesting in this conversation because what we have seen is that Sweden is one of the leaders when it comes to cashless money. It is an interesting country. I was looking at how they got there. But they've got to the place where less than 1% of their transactions are done in cash, which means a majority of them are done by, cashless. They do them cashless transactions. This brought speed and it brought convenience. But also it increased what? What? Can you say that a bit louder? Brought about increased bank and government control. The next one, please. So in 2008, there was a financial crisis that brought a lot of questions and mistrust for banks. If you notice, the paper money that we use, which we call fiat because it is the trust we have all come together to trust and agree that 20 Ghana cedis notes actually carries that value, right? It actually carries that value, so it is the trust. once trust went down in 2008, the next thing people started asking was, so maybe this thing is not worth it. There has to be another way. Fortunately, there was. So in 2009, Bitcoin was born by a man or a woman or a child, because we don't know who he is or she is, called Satoshi Nakamoto. Bitcoin was not just a currency, but it was a movement. A movement in the sense that it was something that has never been before. Something we have all not seen before. These are a few of its characteristics. It was peer-to-peer. You didn't need a bank to transact in Bitcoin. It was also decentralized. No single control. It is secured by math and code, not politics, not policies. Okay? Now, the beginning of cryptocurrency is not the end of the journey. Just as many years ago, we were trading, we were using cowries, and we have Bitcoin. We believe that this is not the end, this is just a destination, a bus stop in the evolution of money. So beginning of cryptocurrency is the next chapter in money's evolution. The other speakers will throw more light on some of the things that I raised. Thank you so much. Thank you for